Seth Levine and Elizabeth McBride, thank you so much for joining us here today at the Center for Social Capital and the Social Capital Insider. And we have so much to talk about, and we're going to try to get to all of it. But first of all, I just want to say welcome and thanks for being here.
Thanks for having us.
Yes, great to be here.
So, first and foremost, we want to give credit to the new book, Capital Evolution, the new American economy, which is described as a bold and timely reassessment of capitalism in America. And so we're gonna dig into that. But I first want to make sure that everybody knows who you guys are and who we're talking to. So Seth, you are a longtime venture capitalist, co-founder of the Foundry Group, and also co-founder of Pledge 1%. And Elizabeth, you're an award-winning financial journalist, author, and consultant whose stories have been read by millions of people worldwide. And from that perspective, this book obviously is a very powerful book, because it's based in experiences and thoughts and ideas that you've both formed over quite a long time and very meaningful careers. So one of the first things I just want to dig into is where this came from and this idea that you talk about in this, because it's so aligned with what we talk about at the Center for Social Capital. We talk about the whole idea of CEOs creating real economic value and profit from helping people and business models built around delivering to customers and employees and people in the community. And that's the real way to build value. And that capitalism isn't necessarily a bad thing because it can do that. And you talk about that idea, but you actually kind of put a name on it. And you have this thing called dynamic capitalism, which I absolutely love. So maybe that's a great place to start out and just, describe what you mean by that.
All right, I'll let Seth take that one.
Oh, okay. We do these a lot. Usually Elizabeth jumps in with the first one, but let me try to take this. So there's a lot to unpack there, but why don't I answer what you just asked first, and then we can kind of maybe talk about some of the other ideas in that question. But very specifically, dynamic capitalism recognizes the power of capitalism, right? The power of free markets, but it also recognizes that the type of capitalism that we've been practicing for the last 50 years, we call it neoliberal capitalism. You could call it the Washington Consensus. You could call it Friedman-style capitalism. So pick your choice. But we recognize that that's not working, and it's leading to levels of inequality that are simply unsustainable. At the same time, it also recognizes, dynamic capitalism also recognizes the increasing power of business in our society as government retreats, as trust in the media wanes, and the need for companies and the people that run them to step up and recognize that there is more to operating a business than just the bottom line. And really, I mean, we're not alone in saying this. I mean, no one less than the Business Roundtable, which is a group of the CEOs of 200 or so of the largest companies in the United States, said essentially the same thing in 2019. They came out with, every once in a while, they come out with these statements on a purpose of a corporation, and they revised it in 2019 to actually acknowledge that there are stakeholders, as they listed them, they were employees, community, suppliers, and the climate, that are other things that businesses need to keep in mind as they operate. And so we really sort of organize our thinking in the book around talking about why capitalism actually is a very effective form of organizing an economy and why it needs to change.
So I love that. And, what we do at the center is zero in on leaders that are doing this and that are recognizing this, and that are realizing this. And I love the fact that you're talking about it from a deeply philosophical as well as a practical perspective. So why do you think, and what made you think that as opposed to saying, hey, we need a new system, we need to get rid of capitalism. Why do you think capitalism works?
So we wrote in the book, and we got pretty, in our writing partnership, we got into the weeds, right? We were talking about the fact that many people in my circle, particularly less in Seth's circle, think that capitalism is bad, right? It's
Mhm.
exploitative by nature. And so we wrote a whole chapter titled that. Is it exploitative by nature? And we came to the conclusion, actually, it is, but it's still the best system we have um, for organizing the economy. And the reason that we need it so badly is that the scale of the problems we're facing is great, and there's no system that can work as fast as capitalism at scale. And so that's why we need it.
But it's a
So
really important time, Chris, to be having this conversation, right? Because I think at one,
100%,
as
yeah.
you, if you ask people under 40, something approaching the majority, maybe even more than the majority now, say that capitalism doesn't work, right? And they want to try
Mhm.
something else. And then we see this in our current politics. The book is not overly political, and we don't have to get super political in this discussion, but you can see in the current politics the rise of people that are very openly describing themselves as socialists. And as someone who is a capitalist by job title, as I like to say, as a venture capitalist, I find that deeply disturbing because there is so much historical evidence that unfortunately doesn't work. And I say unfortunately because I believe that the people that believe in it are passionate about it and they are pure in their intentions. But unfortunately, we know it doesn't work. And they're comparing it to only one style of capitalism, which is neoliberalism, which is the only style that really any of us have ever really remembered, and not comparing it to, say, the golden age of capitalism, which for all of its other faults of that time period, but the time period between roughly 1950 and 1970 something, was actually a time of more shared growth, of more equality, et cetera, and frankly, a time of higher overall growth. The economy during that period actually grew faster than it's growing now. So they're just not necessarily comparing it to that time, and we felt like we needed to write this book in part to defend capitalism, not because it doesn't have exploitative tendencies, but because it is the best way to rise up people, communities, the economy as a whole, if it's practiced correctly.
My God, there's so much to so much to comment on there. It's so powerful. Thanks for being amazing, both of you. But it just reminds me of a couple things. First of all, the old line by Winston Churchill when they asked him if he liked democracy or not, and he goes, "It's a terrible system. It's just the best one we have." And it just that idea of capitalism. It also reminds me of I was interviewing David Heath, the CEO and founder of Bombas, at some point, and he started that company, wanted to help homeless people, give them an opportunity to have socks, but also wanted to have a company. And he said, one of the reasons why I wanted to do this, I said, why not start a nonprofit to do this? And he said, well, you just can't scale a nonprofit. And so right to that idea of these issues that we have, and I talk about this so much, and I'm so glad to hear you say it, so I know I'm not crazy. The problems that we have in our society right now are so overwhelming. Many of them, there just isn't a system that could scale to solve a lot of these problems, other than capitalism and other than companies to be able to do this. But companies, I think we have the opportunity for abundance in the world now like we never have had before because of the availability of so much funds and the connectedness. What do we have to do though to, I hate to use the word go back, but to go forward to a time more reminiscent of the one you're referring to back in the 50s and 60s when it was more of a community based capitalism. I mean, my dad became a salesman in those days, and he used to talk about IBM and how they take care of their people, and that the company was your family and everything. So what's wrong with it today? The type of capitalism we practice, and how do we get back to that old type?
Well, what's wrong with it today? So I think we can diagnose it pretty simply, and it's this focus on shareholder returns only, shareholder primacy, right? We were in
Okay.
this conversation a lot like 5, 6, 7 years ago, but it's still true, right? That concept that companies were driving towards short-term profits because that was the way you were supposed to do it. And in Milton Friedman's mindset, that would everyone would become investors in the public equities market. That mechanism would then distribute wealth reasonably fairly. And he was also writing in a different time, right? When companies were creating more jobs and enough jobs for the entire workforce, when the entire workforce was mostly men and women weren't in the economy at all, which has changed the dynamics. So I think that's the simple answer, right? There are legal structures that actually enhance the inequality we're seeing. And we didn't talk about this much in the book because it's already pretty present in the conversation, but there's also been a big trend toward monopoly power in the country. And that's from changes stemming from right around the time of Milton Friedman, right? When under Jimmy Carter,
FTC.
yes, the legal systems it encouraged companies to get bigger and bigger because the idea was let's make consumer prices smaller and smaller, and so I think those are the two biggest factors. Seth might want to add one more, but I would say what we need to do to get back or to go forward is recognize some principles and come together around them. And maybe Seth could talk about what we think the most important principles are to organize our transition.
Yeah, let me tackle that. I think the first one is this idea of longer term thinking, right? And one of the real pernicious aspects of shareholder primacy has been that it focuses business leaders on very short term outcomes. And it drives this sort of extractive mentality. How do I cut costs more? And that led to outsourcing on a scale that was probably overdone, right? And we're now trying to sort of claw a little bit back, but it also led to other forms of extraction, and we really sort of treated the middle class kind of like we treat the environment, by the way. Like the environment was a resource to be extracted. The middle class workers were a resource to be extracted. They're a cost center. They weren't viewed as potential business partners. So thing one is shift our orientation to longer term. We've seen some companies try to do that, very explicitly talk about how they aren't going to manage quarter to quarter. That's, I think, important. There's actually an entire stock exchange that's trying to be built by Eric Ries to sort of get out of that short-term mentality and short-term thinking. It will actually likely not even have quarterly earnings reports in the same way. It still have
Oh,
reports,
wow.
but not in the same way. But just an idea that he's floating around. But the second thing is to create more of an ownership economy. So one of the things that's happened over the last 50 years or so is that the percentage of a company's top line that ends up getting paid in the form of wages to workers has gone way down. Basically, companies are much more efficient. The types of companies that are big companies today, think Kodak back in the day versus Google or Alphabet today, there were a lot of workers to generate revenue at a company like Kodak or Westinghouse or would pick your big manufacturing style business back in the day. And in tech businesses, that just isn't the case. Now, we're not arguing that those companies should somehow hire more workers and not be as profitable. But what we are saying is that companies need to find more and better ways to include workers in the ownership economy. And really a good way of saying that is we want to create more capitalists. And so that's how we think about sort of that aspect of dynamic capitalism. So there's a few things that we outline in the book, but a lot of them sort of fall under one of those two auspices, like think longer term and figure out how to share ownership across the economy. In Silicon Valley and in tech startups, it's pretty common to share ownership outside of the Valley and outside of tech entrepreneurship. And this was a little bit of a surprise, at least to me, maybe not to Elizabeth, but the rates of sort of employee ownership through stock plans or EOPs or whatever are significantly lower than I would have expected.
that's a field that's growing, obviously. I mean, I was just at an event and met so many of these companies that are trying to promote that and trying to move that forward. But it seems like such a novel idea, right? It's presented as such a novel idea when it seems like it should be a no-brainer. When I heard the talking about that in particular, when I was listening to the numbers based on how those companies are succeeding in profit, their profits are rising significantly since they went to that kind of a mode. It gets to the kind of the next question, which it's actually for both of you, maybe more for Seth, but certainly for you. You guys aren't saying this simply because you're nice people and you think this is a nice way for America to operate or the world to operate. You see the value in it, right?
Yeah, well, for two big reasons. One is that actually, I think most companies, most reasonable CEOs have an interest in existing and being in a thriving and relatively fair economy. I don't think we can lose sight of that. And I don't know
Yeah.
if that makes me a nice person or it makes the CEOs that we talk about a nice people, but I think generally that's just true, right? If you go other places in the world where countries and economies are not functioning, they are not very nice places for anybody to live. And nobody wants to see that happen in America. So there's that. But then the second thing is that companies that do find ways to build ownership into their business models, ownership for employees or ownership for communities and their own customers, because that exists as well. Companies that do that actually thrive. We have a great example in the book of Pete Stavros, who works for KKR, which is a well-known private equity firm that's gotten a lot of bad headlines in its day for being a ruthless operator in one end of the economy. But it also has begun implementing ownership stakes for workers down the line. And it's doing very well with that model.
Yeah, Pete's a great guy. I interviewed him a couple of months back, and he's going to be contributing some thoughts to an upcoming article as well. And I genuinely believe, to your point, Elizabeth, I really believe he wants to do this, and he has an internal desire to do this based on things that have happened in his life as well. But he also sees the value in it, and this is not something that's contrary to his impulses as a very smart businessman. And to that end, Seth, I mean, you've devoted your life to raising money for companies, and I'm sure part of that process is looking at a company and saying, what's the profit potential here? Is this a good investment? Why do you think this way of doing business is a good investment?
Yeah, I think that it's a fallacy in business to think that profits and purpose are somehow at odds with each other. I know Pete would say that because he said that to us when we interviewed him and talked to him, but lots of other people would as well. And you mentioned this in the lead-in, but one of the organizations that I founded is this group called Pledge 1%. It encourages companies in the tech community, because that's where we're focused, to give back to their communities, mostly in the form of pledges of equity, but also time and profit. We have 20,000 members globally. We've generated over $3 billion back to local charities. Like, it really works. And the pitch is exactly that. These things don't need to be at cross purposes. And in fact, employees prefer to work for companies that have a clear mission and that sort of care about obviously the employees, but also their communities and other stakeholders. That reduces employee turnover. It decreases the expense of recruiting and hiring and attracting employees. All of these things ultimately are good for the bottom line. In the book, we tell one story in this particular line of thinking. Dan Schulman, he's now running Verizon, but at the time he was running PayPal, and he undertook this study. It was kind of by accident. He was preparing for a company meeting, like an all hands, and he sent out some sort of survey to just sort of check on how were people doing, like what were people thinking. And he got back some pretty disturbing results. And the upshot of that is he decided to really dig into what was going on. It turned out a lot of the employees at PayPal especially people that were in the call centers and answering the phones and things like that, were really struggling. And he said, hey, that surprised me because we paid above the industry average, right? Like I thought the markets worked. I just, I was doing the right thing by paying, a little bit more than my competitors, but it turned out that wasn't actually working. There's one story we tell about an employee who was selling plasma, blood plasma
Oh
to
my
make ends meet,
God.
right? I mean,
Yeah.
just crazy. And so to Dan's credit, he made an invest, he convinced his board to, and this is a public company who's got, shareholders who care about profits and things like that. But he convinced his board to make real investments in changing comp structures. They created an ownership program for everyone. In particular, they focused on supporting healthcare costs because that turned out to be one of the big drivers of expenses for people. And the result was employee turnover went way down, employee
Yeah.
satisfaction went way up, and productivity went way up, right? So
Yeah.
in his
Yeah.
telling, yeah, we invested, I think it was like a $10 million investment for a company that was multi-billion dollars. It was not a big investment, but we invested this money and we got a return on it, right? It was actually better for our bottom line to treat people better. And the key thing, and I've said it sort of quickly, but I want to repeat it, is that the market in that case wasn't working because even paying above market rates was not actually enough for people to ultimately live on. So now, I mean, everyone has to live within their own sort of resources. And this is not an argument that, whatever, there should be a $50 minimum wage or something like that, right? I mean, there needs to be economic reality. PayPal was in a position to be able to afford that. But I think a lot of businesses could actually afford to do a bit more, big or small, because they actually might find that the return on that is really worthwhile.
Yeah, very well said, and thanks for spelling that all out in dollars and cents because it's a very real issue in that regard. And I had a chance to interview Brian Nickel a couple of years ago, who was at the time the CEO of Chipotle, and he talked about all these programs and things that he had brought that cost a lot of money, giving mental health benefits to all of his employees' families, not just them during the pandemic, for instance, because they said they needed it and their families needed it. And spending a lot more money on their food than they had to by creating collectives of farmers that would produce higher quality food. All these things cost a lot of money, but their profits and their stock price just keep winning up, rising and rising and rising. But he talked about how, just in spite of all that, he constantly had to have arguments with his board, who would say, "Why are you spending so much money on food?" And he would come back and he'd say, "We're a food company. we make food." And but all kidding aside, how do you address the idea of not just changing the mindset of the CEOs, but changing the mindset of those boards, which, right, they're so focused on that one shareholder, right? How do we change that?
Well, it's important to recognize they have a legal obligation that grows out of Milton Friedman's ideas of capitalism, right? They are
Mhm.
legally bound to put the shareholder first. And so I think there have occasionally been real movements to change that part of the law. And in the book, we write about B Corps, which are doing it at a very grassroots level. But there are also sometimes efforts to do it at the public company level. And Seth can speak a little more to that. But I just want to highlight the fact that I believe it is already changing because the man we just highlighted, Dan Schulman, went from being CEO of PayPal to being CEO of Verizon. And he was obviously hired by a board of directors who,
Mhm.
for his business acumen, but also probably because he embraces and is able to balance the community needs. And Verizon is a company that has a lot invested in the country and all of the communities within the country doing well. And they obviously have recognized that at the board level.
It's a really good point. I hadn't thought about that exactly, but having spent some time with Dan, like there's no way that these ideas didn't come up
No.
when he was interviewing for the Verizon CEO job. And by the way, some of these stories are pretty famous, right, in terms of what he did at PayPal. And so it is interesting to see a board say, hey, this is something we care about. By the way, I mean, Jamie Dimon was the head of the Business Roundtable, Jamie Dimon of JP Morgan. And we actually got to talk to Jamie. We interviewed him for the book. Um, and that's one of the biggest banks in the world. Turns out it's like the fifth biggest bank, because there's like some huge Chinese banks that you've probably never heard of that are one, two, three, and four. But in any event, this is someone who talks about these sorts of things all the time as well, and who's considered sort of a lion in corporate America. And so there are examples of people really speaking out and thinking about it. But you point out something that is, and Elizabeth touched on, it is really important, which is that right now our legal structures outside of becoming a PBC, a public benefit corporation, require boards of directors ultimately to act in the interest of their shareholders. And there's some leeway when you're operating a business to have using the business judgment rule. And so boards get a little bit of leeway around that. There's pretty much zero leeway when it comes to selling a business. If you have two offers and you think one is a better long-term fit or whatever, but it's a lower number, it's really hard as a board. You expose yourself to a lot of liability there. So there's certainly work to be done from a corporate structure standpoint, and it has been historically challenging. It's getting a little bit better for companies who are B corporations or PBCs to go public. I think it's starting to be a little bit more accepted that that's a reasonable way to go to organize yourself as a public company. And there's Etsy did it, and Rally Corporation. There's a handful, Unilever obviously, that talk and think this way. But I think what it's going to take, and this is part of what we argue in the book, like government is going to follow the leadership of business, not the other way around, right? It never really was the other way around, but it's definitely not that way now. Regardless, but that's not a political statement on the current administration.
No, not at all. Yeah.
That's just how it is in government now. And so I think it will take leaders like Jamie, like Dan, and like so many others to say, hey, this is how we're going to operate our business. And to just stand up for it, right? And say, and maybe it'll take a couple shareholder lawsuits. People coming after them and then saying, look, I'm not going to back down. I believe this is in the best interest of the business.
Yeah. And there have been. I mean, there are grassroots efforts. One of the first stories I ever did as a business journalist was a group of nuns who bought a bunch of stock in Armstrong World Industries. And they would be such a presence at public meetings because they all had on their fun attire, and they would stand up and say, you guys do not have any women on the board of directors, and you need to change that picture, right? And so you see groups of shareholders getting together, and people do it on climate, people do it in other issues as well. So there is space for that, but it's not enough of a.
The other thing that I find interesting, it just sort of along these lines, is like, at least in my world, like the investor that everyone lionizes the most is Warren Buffett. Right. And he's super long term. It's like, this is the kind of stuff he actually talks about. Quality of management, long-term thinking, investing for the long term, investing for, and it's like, and he writes, annual letters to his shareholders. He talks about all these things. And it's like God has spoken and given us the tablets, right? I mean, that's how people treat it. And then people even sometimes describe it as like making the Hajj to, the pilgrimage to Omaha to go to one of his meetings, right? But so there are some great examples of people who we lionize talking about these sorts of things. It's just going to take a little bit more time, effort, and frankly, success, right? We know these businesses tend to be more successful, and it'll just take more of that, right? We tell this in the book. We tell the story of Jack Welch, who's probably the most famous practitioner of like really strict shareholder, Friedman style capitalism,
slash and burn capitalism.
Well, Neutron Jack, right? He would fire so many people, and it turned out it was completely a house of cards, right? And he's a lot. He was for a period of time. Everyone is like, "Oh my gosh, the great Jack Welch," and he built all this value, and the stock went up so much, and it turned out to be a complete house of cards. And GE has been broken apart now, and is like a shadow of what it could have been and what it once was. And it turned out all he did was essentially lie and perpetrate an accounting fraud on people, and it just didn't work, right? And so. Those are good counter examples to like how to not do things.
It's so funny when you say that. I remember my boss, and whenever it was, the early 2000s who loved Jack Welch, and
Mm.
he like had that thing, you fire your bottom 10% of
Yeah.
performers. And it was such a horrible place to work. I just
Sure.
want to say that, right? It was absolutely, it was miserable. But I also want to say something from a journalist perspective, which is, I think one of the underlying issues is that we do not recognize enough in the media or the information environment that businesses are leading and can be leaders in a societal shift. And so there was a great example of it today. Seth and I talked about it, where Axios had a story, and it was climate. We're slowing the rate of climate change, but they ascribed it. They put it all on policy, right?
Mm.
And I think by definition, journalists are sort of reared and trained to think that the government is is doing everything, right? You look to the government to solve your problems, or if the problems are there, the government's fixed. And really, it's just that's a fallacy too, right? Because what's happening now is that climate change is slowing because businesses decided they needed to be more long term. They needed to make investments in new technologies, and consumers decided they were going to support that, right? That's driving it with policies that support it, but it's not the policies that are driving
I
it.
mean, Larry Fink, who's the leader of the largest asset management firm in the world, and he said very clearly, climate risk is investment risk.
Yeah.
Thank you so much for saying that, Elizabeth, because that really is the impetus for why we started, our center and our Social Capital Insider. Is we said, business is leading the way, and journalists don't get it for the most part. They'll do a story here and there, they'll touch on it here and there, but they don't understand the movement that is happening. And I always say, I'm a student of history, and as a lot of journalists are, we read a lot, and you go back to feudal society, hundreds and hundreds of years ago, where feudal lords just realized, okay, I'm going to help these people, and they're going to, protect me. And in the absence of an overreaching government that was able to do it, or overarching government, and in a lot of ways, I think we've kind of gotten to a point where, for a whole lot of reasons, it's multifactorial, where a lot of governments in the world just no longer can handle all of the issues and the rising populations and everything else. The old systems just aren't necessarily working, and suddenly you have these businesses that are just overflowing with capital and overflowing with resources that could actually probably solve a lot of these issues. I mean, a lot of these companies have, are bigger than countries. And I mean, they could solve a lot of these problems. And a lot of them want to, for a lot of the reasons that we've talked about here today, because they see the benefit of it long term, and they want to be around not only for 5 or 10 or 20 years, but 100 years. And so they're almost having outlooks that countries would have had way back when. And so there's an incredible opportunity for these companies to lead the way in so many ways. And we believe that so firmly here. So I'm glad that you echoed that. Thank you so much, for saying that. And I want to just touch on a couple of other things real quickly, that you guys talk about and have talked about, because when we talk about now, companies leading the way, right? How do you see companies, not necessarily telling government what to do, but in a very practical way, leading government?
It's a great question. You want to take it?
Try to jump in. I mean, we actually do see some examples of companies telling, or company leaders telling government what to do, right? We've just seen that in the beginnings of the second Trump administration. But one of the questions that actually we describe what you just talked about in the book quite clearly, right? Government in many respects has shrunk in terms of its power, right? Neoliberalism treated government as the enemy. Ronald Reagan famously said government is the problem. And companies have really stepped into that void. And to your point, many companies are bigger than lots of nation states, right? I mean,
Mhm.
really many of them. And because of that, they have a certain responsibility. One of the questions that we ask in the book is, where does that responsibility end? Right? What is too much? At what point are companies wading too much into social issues, let's say? And I think it's an open question. I won't sort of steal the thunder of the book to describe the conclusion, but we talk about the nuance of that. And one of the things we really pushed Jamie Dimon in particular on was exactly this question: where is that line? He talked to us about fellow CEOs allowing themselves to be weaponized, to use his word, against certain interests by other interests, and he talked about the line between sort of values and politics. And I think it's a really hard line. Like, politics in many respects stems from values. And I think one of the questions that we ask, which is why I think it's such an interesting book for anyone really, but an interesting book in particular for leaders and businesses, where is that line, right? What should you jump into, for a social issue, let's say, especially for companies that have large employee bases who likely have many different sets of values, and maybe have large customer bases who also have very different sets of values. And where is that line? And so we talk a lot about what that means in terms of running a business, and how businesses can and should be expected to operate. And we give some examples primarily of private companies that have really kind of strayed very far into politics because of the values that underpin them. And that's probably okay for private companies, a little harder for public companies, and maybe not as appropriate. But these are the types of questions that are very thought-provoking that we try to bring up and address in the book.
And I just want to add, the other question that stems from what you just said, Chris, is that how much accountability can we build into the new system so that business CEOs don't turn into all powerful, right? We still need government to hold businesses accountable. We still need mechanisms to rein in the power of some of these big corporations. That's for everybody's own good, right?
Yeah.
And so I think that's probably, to my mind, in this moment, after a year of the Trump administration, that is a very pressing question.
That's a really good question. And we have a whole chapter that talks about government and the role of government. And we've sort of got these two ends laid out. And, there's one party that says government is the enemy, and the other, there's another group that says government should be involved in all sorts of things. And, we talk about how neither of those two polar ends make sense. But I think it's really important to acknowledge, like, there is a role for government in checking what would otherwise be the power of unelected, sort of very powerful, men and women who run these organizations.
Mostly men.
Mostly men. Yeah.
That is another topic that you guys have talked about a lot, obviously in both your books. Where is the capital going, and so on and so forth. And I don't want to, again, I don't want to steal the thunder from your book and everything, but you do have some great ideas on the importance of reallocating capital, right, and reallocating resources that you both have talked about. And we talk about that in terms of involving people in the company as much as possible. We were talking about ownership before, right? But there's other ways to involve people in economy and in value production, right? Just creating access, right?
Yeah, expand. I think we would probably prefer the verbiage of expanding access rather than reallocate, right? I mean, I think a lot about it's, we, as the pie grows, if you will, right? Like, we want to have a bigger pie, right? Not a shrinking pie.
Yes.
And so, yeah, we might need to divide it up a little bit differently, but really, ultimately, we're not trying to take anything away from, or we don't advocate taking away anything from any group. We're really talking about how do we expand access to other groups. Frankly, that's capitalism, right? That is capitalism working. And it's really a aberration of capitalism that we don't do a better job of getting capital to people that are really deserving of it and will return, create a return on that capital.
Yeah, I think it's really a shame in the past couple of years, it's become like meritocracy has become like this bad word in certain, like in, the intelligentsia or magazine article writers. I think there's a whole book about the, illusion of meritocracy. And I just think meritocracy is a great thing. It's never going
Yeah.
to be perfect, but that's what we're working on, right? That's what we need
Hmm.
to be striving toward and returning to. And in fact, when you talk about access to capital for women, people of color, or we write about this in the book too, people who don't grow up in people who grow up poor, right? We talk about expanding access to capital for those groups of people. That is meritocracy.
Hmm.
And so embracing that idea is fundamental to the changes that we're talking about.
And I talk about this a lot as well. People are our greatest resource. And when companies realize that, they want to expand access because, you know, we've had so many CEOs that say, I hired this person to do this, but then I realized they could do this, and then I could realize they could do that. And, why not tap into 100% of what human beings are capable of? And we haven't even begun to understand the full potential of people, I think, in our society, and people from every walk of life, and people from, every sector, and so on and so forth. So I mean, there's so much value that is untapped.
Well,
And
when you
go ahead.
talk to Pete Stavros, I mean, one of the things that
Yeah.
he talks about very clearly and openly is this particular idea, and I think he comes by it very naturally. His father was a sort of what you call blue collar worker, construction worker, and when you talk to Pete about what they've implemented in their businesses, part of what he talks about is like he believes great ideas can come from anywhere, and he
Hmm.
wants them to have a very direct stake and a feeling like, hey, I'm an owner here. If I've got an idea, I need to go and take that up the chain and like let's implement that, right? And there's lots of examples of that across industry. We have a couple of other stories in the book. Optimax, for example, comes to mind, which was not a spin out, but a couple guys that worked at Kodak that had this sort of lens technology idea, and they do a really good job also of talking about the same thing. How do they take ideas from the people kind of on the shop floors? Again, kind of pioneered by, I mean, he had some challenges as well, but by Henry Ford, right? I mean, he was very much
Yeah.
about how
Yeah.
do I listen to the people on my production line. And I mean, one of the many things in terms of like business operations that he pioneered was this idea of great ideas can come from anyone along the line.
And that's kind of full circle back to that idea you started with, which is we had this form of capitalism back in the 40s, 50s, that seemed to get this a lot more. And then it just kind of somehow or other, went astray. And that leads me to one of my final questions that I'd like to ask you guys. Because when we think about socially, how did we get here from there? I love to always ask people, how did you get here from there? You guys are very centrist, practical, human-centered, people-centered capitalists, and you have a very powerful grasp of all this, but more importantly, a commitment to it, a strong commitment to it. Where does that come from in each of you? How did you get here to wanting to promote this so much and talk about this so much?
Okay, that's a really good question. One I've never actually thought about. I think for me, um, so I'm a journalist, right? I started in my journalism career back when printing presses were the big deal, right? My first job was as a cops reporter for a small town newspaper in Lancaster, Pennsylvania. Um, when you so I probably interviewed in my life, I don't know how many tens of thousands of people from everywhere, right? From like refugees with nothing in
Mm.
their hands to Jamie Dimon. Um, what I concluded, what I believe from all of those interviews and all those different experiences is that like the the breadth of humanity is not that wide. We are all
Mm,
here, right?
yeah, yeah.
When you figure that out, you think, okay, well, why do some people end up with $1 billion and some people end up with nothing? And then that just leads you to the conclusion that our system needs to change so that
Mm.
more people get a chance.
I'm totally with you on that, Elizabeth, having my background as a journalist and having very similar experiences. And I think that's why I'm doing this and why I'm so committed to it. What about you, Seth? What's your perspective on that?
Well, I think it was important for people like us to write a book like this, right? I mean, when we started talking about this subject, um, Elizabeth and I had written a book before. We often sort of share articles and things like that back and forth with each other. And when we started to really kind of pick apart this idea of like what's going on with capitalism and what does that look like in 5 years, 10 years, 20 years, um, one of the things that we did is we went and read other books on this. But it turned out that really none of the other books that at least that we found that were written on this subject, frankly, were that interesting, mostly because they were either written by academics. They were maybe thought provoking from an academic perspective, but these were not people that had any sort of real practical experience in working in business. Um, or they were sort of like the personal story of a CEO and what usually his experience was doing this one way of business, and he did it one time and then he wrote it up. And we thought, I mean, I've invested in across the funds that I've helped manage, hundreds, really thousands, if you include Techstars, other things like that, of companies. Elizabeth has interviewed 10,000 people, written about thousands of companies. And we thought, well, we bring a really different perspective because we're actually practitioners. We actually are running businesses, are investing in businesses, are writing about businesses, have worked in business, et cetera. And we felt
Yeah.
like that perspective was really missing in this conversation. And at a moment in time when this discussion was becoming more and more important. And fortunately for us, Chris, well, when we started, I mean, this book took 2 years to research, a year to write, and then editing. And, we started on it like 3+ years ago. It's
Hmm.
only gotten more, this question has only gotten more important. And so the timing of it coming out, as it turns out, has really been perfect because this is a conversation that we're having nationally. What is the future of capitalism? And should we
Yeah.
try something else completely?
I love that on so many levels, but we started this concept and this idea of the Center for Social Capital and Social Capital Insider when the pandemic happened, and then all kinds of things happened. And by the time we actually founded our new center and everything, it had been 3-4 years, and now the timing is perfect, and it's fascinating the way this all happens, and it is fascinating the way you guys have come together, and everything that you said today was fascinating. So thank you guys so much, both of you. You've brought such a wealth of knowledge, not just to the book, but to this interview. Thanks for sharing your heartfelt and incredibly brilliant thoughts with our viewers. We really appreciate it, and we really appreciate you taking the time.
Well, thanks for having us.
Yeah, thank you, Chris, for having us. Hopefully, your listeners will find this pique their interest and they'll go check out the book. Exactly. Well, obviously, we'll put it in the show notes where you can do that. But
Absolutely, and I would advise everybody to go check this out on wherever they buy books, and I'm sure Amazon and everywhere else. The New American Economy, Capital Evolution, the New American Economy is a brilliant book and an important book. So hope everybody reads it, regardless of whether you're a CEO or just a interesting somebody interested in business reading, or somebody that wants to realize or wants to know how we can change the world, because I think we can if everybody reads this book and understands that it is possible. So thank you guys.
Thanks, Chris.
thanks, Chris. Appreciate you.
All right, take care.